Hey everybody, I wanted to drop a little video here. Of course, as always, it is your trade, your responsibility. If you're okay with that, keep watching. I want to talk about the scanner here. I've had so many questions about it. Is it Leaps? It is absolutely not. It's completely different from Leaps. It is an absolutely revolutionary tool that I've been thinking about over probably a decade, and I finally put it together. It has 3 decades of all the crazy stuff in my head, having managed $1 billion in option strategies, and I'm just absolutely thrilled that it's ready. We have these incredible features in it. I'm giddy over it, and so I wanted to give you a deeper look into what kind of makes this very different from anything else. It's not even close to anything else. It's not built around an indicator, right? It is not built around an idea. This is a process. That's what I want you guys to think of this. The other day, somebody showed me something that had like a volatility gauge and a put call parity gauge, and it sort of gave you a nice thing. That's nothing. That's free information you can get on Yahoo Finance, and you turn it into a gauge. You can probably do that on GPT in about three seconds. This is a deep, repeatable process that runs through thousands and thousands of stocks through my methodology. And that's going to save you massive amounts of time, right? Let you get back to the things that you want to do, because the income trading, if you want to run this as a business successfully, it takes time. It takes effort. Everyone's saying, oh, an hour a week, an hour a month. That's all nonsense. If you really want to do this well, it takes time. And something like this is an absolute game changer. So 30 years developing this kind of stuff, and it's really based around my pillars of edge. This is that same framework that I've used as a professional money manager over many, many years as a market maker, right? So that's where a lot of this comes from, this sort of background that I had being an options and volatility arbitrageur basically for about 15 years. And that idea of how pricing works, how sentiment works, how everything plays into your risk reward, really, right? When we're option traders, we are sentiment traders. We have to recognize that whether we know it or not, we are sentiment traders. Fear, greed, and all that stuff in between. This is the reality of what we do. And that's why you can have 80, 90% win percentages and still not really make any money. And there are some very, very good reasons for that. And I get into that in my mentoring, and they're very expensive, $20,000 mentoring program. This gets you in at a fraction of that, absolutely an absolute fraction of that. Okay, so enough about that. You want to see more of the scanner, right? So these pillars of edge, layers and layers, they are the insight that goes into, importantly, everything that kind of filters down into these names that become our candidates for the very, very best income. And turbo, right? Turbo is upside, because I am somebody who hates to give up upside, right? That has driven everything that I do in the space, and really a big part of what I've taught people that has really resonated with people over time, which is you're not in risk markets to make a little bit of money on income trades and accept all the downside and basically give up a good chunk of the upside. You want to take advantage of the wonderful engine that is the economy, that is innovation, that is the stock market. It is the greatest thing that's ever been given to us as a way for us to move the needle and generate wealth and generate income and especially in a world that is going in a direction that is going to be very, very challenging for a lot of people. People just don't have enough money. They haven't saved enough money. I'm going to show you that in a video I'm going to do later on this week. People are really underfunded. Pensions are underfunded, and they're very underfunded for retirement. You have got to start figuring out ways to move the needle for you, for your family. And that is really what gets me excited about stuff like this, is that income is absolute. This isn't some sort of gimmick trade, right? This isn't that chef's gimmick. He's got a hack that his cousin showed him. He wants to sell it to you. And okay, it sounds wonderful, sounds delicious. But really, this is about running a business. So this all comes in. And one of the most underrated things in trading and investing, et cetera, is it keeps you away from more of those trades that are bad news before you even put them on, right? So I see traders constantly getting into sort of temptation, what they see on TV, what their neighbor told them about, whatever it is. This is about when you want to trade as a business, when you want to run your book as a business to actually make money and not just have excitement, which is better for Las Vegas, in my opinion, then you really need to think about that. And so that's extremely underrated. Remember, the old rule is location, location, location. In trading, it's edge, 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 and edge. When there is no edge, when there's not enough edge, I run the other way. I run in the other direction, and that's how you have to do it. It's plain and simple. Can things change? Of course, a good trade can go the other way at some point. But if you start to practice getting those better setups and avoiding the ones that are already in trouble before you even put them on. It made me think of, when I was thinking about this presentation, it made me think of, not that many months ago, a friend has a Discord and I dropped into it. I drop into it once in a while. And there was somebody in there who sold a 14-cent naked call on NBIS. And the thing went up like $30 or something 2 days later. Not the next day, a couple days later. So that's like, I don't know what that is, a $25,000, 25,000% loss. It's just a massive risk. You turn 14 cents into having to cover for like $28, $29. There are trades out there that people are doing that just make no sense at all. And maybe they're exciting. Maybe they scratch some sort of itch that people have. I don't have that itch. Or if I have that itch, I have other ways to satisfy that. Bet on a football game or something. So I take, was that a little bit of luck? Of course, there's a little bit of luck there. The news comes out and the stupid thing costs them a fortune. There's no question. But there's an old saying by Lee Trevino. It is, the more I practice, the luckier I get. And there's an absolute truth in there, which is the more we focus on doing things better. You know what? The more you practice, the more you're going to avoid the tree, the more you're going to avoid the rough, the more you're going to get that nice bounce when you're on the golf course. You're going to get better bounces in the market the more you set yourself up for success. So market environment, technical structure, volatility, option pricing, skew, term structure, big flows, money flows, relative performance, sentiment, the quality of the business, right? People underestimate the quality of the business. This is pulling in really, really high quality names. If you don't think that quality is important, you got to read my chapter I did in, I can't remember the name of the book, Market Wizards or Market Masters. I think it was Market Masters on this stock. And somebody was saying at the time in 2021, they said, oh, forget dividend stocks. You can just do cover calls on I think it was Square, and you can just keep doing that. You're going to make a fortune. Well, what happened? Square went down about 75%, 80%. And guess what? It has barely come back since then. And so really, there's a big problem there. You got these big, juicy premiums, but guess what? Your bond proxy, right? It's a bond proxy that you're creating, turned out to be a disaster, and now your principal is basically decimated, right? So this is the problem. That was a 400 PE stock. So this is about being sensible. I'm going to show you here. This was something that Goldman Sachs put out a while ago, and they said, listen, in high cash flow stocks, quality names are the ones that are going to generate those consistent flows, right? This game isn't just about making money. Anybody can go out and make money. Can you keep it? Can you add to it? Can it be 3 steps forward and occasionally 1 step back instead of 1 step forward and 3 step back? You're not going to be in business for long that way. So you want to have those better and better setups. So see, we got the hot list over here on the left. That is these are where the pillars kind of start feeding into thousands and thousands of stocks based on the environment. And this changes. The criteria for things that come into here changes based on all these other things that I've talked about. And it changes on the broader environment as well. Are we in a really growthy environment? Are we more in a kind of, sort of wheel spinning type environment? Are we in a difficult environment? Well, this can start looking for things that make more sense in those kinds of environments. So this is all about pivoting and shifting and moving your feet. That's what the system does. It shifts its feet, as we should all do. So this isn't static logic. It adapts. And then the eject, this is your eject price. So this is going to address one of the very, very important things. We'll talk about that in a moment. Now, on the right side of the dashboard, you've got those broad market gauges, S&P, NASDAQ, Russell. This isn't just stock is pointing straight up. This is about all the things that I've talked about in sentiment. Recently, the market was strong, and we had actually kind of a yellow on SPY at one point. It just would not sort of get better, get more positive. And we saw a very difficult period in the market as a result. So this is taking into account things that matter, things that are important, not only the simple things. Some of those simple things are good, but you cannot only look at the simple things. And what they really do is they really help you define the backdrop we're operating in. And if we're going to trade individual stocks, which is what we do, then we need to understand the different time frames, right? You need to be able to zoom in and out. When positions go against me a little bit, if it's the right setup, if it's the right backdrop, if it's the right theme, if it's the flows, if it's the right volatility levels, sentiment, all these other things I'm talking about, if those things are in place, then I'm more confident. People say, well, aren't you worried about this? I played Goldman Sachs all the way up. I've had big pullbacks in there, but I've said, no, this doesn't matter. This is a name that makes a lot of sense in so many different ways, and it just came off of all-time highs 2 days ago. So you have to be able to, in order to play the short time frame game, you have to understand the medium and larger time frames, at least the medium time frame, right? That is going to give you confidence, because you need confidence in this game. That is what keeps you committed and keeps your conviction up for themes and for names that you really, really believe in and that have been given you the green light or the yellow light. So remember, in the hot list, you've got yellow. These are the yellow MTIs. These are going to be more incomey, right? These are the positions that are going to look a little better. Other kinds of names, right? So you've got Alphabet, of course, still looking green. This is more of a turbo, right? So when I go through here in the morning, I look at this. I look at my alpha momentum, which we'll talk about in a moment. I'll look at my overall broader markets. I might look at a few little things here. Look at Taiwan Semiconductor. My goodness, falling off a cliff. Actually, we did a big hedge on that on Friday. Got out of a bunch of high-risk positions, the higher risk positions the day before, tech positions, and then put on a very, very nice hedge, which I think could come in handy this week. I think we're going to have a little bit of difficulty. But you can see here, those turbo trades, very, very positive. So when you come over here, you want to know what the trade is. You get the various strikes, you get the month. It's looked for the proper month. It's looked for the proper levels that you want to find, and it gives you total net debit, net credit, depending on what you're doing. Of course, an income trade is going to be a net credit, and a turbo trade is going to be a little bit more sophisticated than that. Here's an income trade over here on Broadcom. Now, Broadcom has pulled back. Now it's sitting at a yellow, right? So this is an income trade, and it's a down yellow, right? So we know that means that things are deteriorating a little bit there. That's one we want to be a little bit careful of, and especially since we're underneath our exit trigger, right? We're underneath the exit trigger. This is when you want to be, it's on the radar screen, you're interested, it's being selected, but it's also having some trouble, right? So it's yellow, income, it's below that important eject level. So this is in management mode, right? So we want to make sure that we've got the MTI, we've got exit levels. This is what's going to enable us to take care of a couple of those important things. So what are the three things that really, really bother traders, that traders find very, very challenging? Well, number one is, of course, finding good trades. Well, here you go. From thousands, here you go. So another thing is, number two is when to get out for a profit, and sometimes in a challenge position, right? For a loss or for a position that's going against you, that can be a difficult thing to do as well, especially when to get out for a profit. And then number three, very, very underrated. How do we stay in good trades? Because and I've had this conversation so many times, I can't even count at this point. I tell people, listen, if you don't maximize your benefit from positions that are very strong, that are going in your favor, that have given you all the indicators that they really, really have some oomph to them, some tailwinds behind them, you're doing yourself a disservice, because so many people have come to me over the years and said, Hans, I can make money. It's possible to make money. I just give it back. I lose, I lose. Then I get frustrated. I revenge trade. A position goes against me. I refuse to take. I get buried, and now I'm in a hole for the next 6 months, and that's taking up my emotional capital, right? So one of the benefits to something that keeps you on the right side of things is staying away from trouble, not just because it could cost you money, but because it's keeping you from focusing on the positive things, right? It keeps you from seeing the market. I've had people come to me with positions that have dogged them for 9-10 months, and I say, listen, this is what we're going to do, and they get out of them, or they get rid of some of them. And guess what? It's like the sky's open and it's like beautiful again. They can suddenly see opportunity. They can see things. They start getting confidence back. There is a big downside. That emotional capital is something we have to regulate and manage all the time. So this is very, very important stuff. Confidence, discipline, these all feed on each other. So you've got the eject here that's going to tell you, this is going to keep you in a trade. When you're in a good trade, let it go. I have run the heck out of Alphabet this year. I have run the heck out of Goldman Sachs. I ran the heck out of Snow and should have gotten out of more, but did extremely well on it. I have run the heck out of Micron. You have to do that in some of those positions, and a tool that can keep you on the right side that says, no, look, stay in here. And in fact, you get the trading indicator. You get these trading indicators when you're a member of the program. You get the trading indicators for TradingView. So you can use this for anything you want, not just for the names that are on the scanner. And there can certainly be a whole bunch of those. We've got a whole bunch that we have in here. There's got to be about 100 names in here. GE Vernova, one industrials acting pretty okay. Certainly certain names in there. Positive MTI trend. Here's Intel, yellow, but not a good one. Here's one. Here's a yellow, which is incomey type trade. But what I like to see here is we've got the right direction of pick here, right? So if we have a left arrow, it's a little bit more cautious, The right arrow is a stronger yellow, very, very nice. We're coming from a more difficult place, and we're going up into a better place, and we're heading in the right direction. Direction is very, very important. Listen, you can chart anything. You can chart your P&L. You can chart your portfolio, the success in your portfolio. If you do that over time, you're gonna learn some things about yourself. That good periods continue and bad periods can continue as well. And if you truncate some of those bad periods, you're going to be in much better shape over time. So the direction of trends, which of course are helped by the alpha momentum area, we can see consumer staples. We have a daily, we have a weekly. This is giving you a little bit of a longer term. Remember, time frames, right? You want to see what's going on right now. You want to see what's going on a little bit medium term, and then longer term as well if you can. So here we go. We can see over the last month we have some weakening slightly in healthcare. I think that's going to turn around. We still have some nice yellows here in the shorter term, and that's why I'm starting to position a little more in healthcare, because I do believe in that broadening theme. You can see consumer staples starting to look interesting again. Look at this. We've been having trouble over time coming back in. So what is this taking into? It's taking into flows, taking into big money, taking into strength versus other things, taking into option pricing. I don't like selling extremely high option pricing. I don't like selling extremely low option pricing. That makes no sense. There are certain rules that there's certain many studies out there. I just kind of know them intuitively, having done it for so long. There are many studies showing that there's a certain area where there's that low-hanging fruit lies for income traders, and really for any kind of trader, for long option traders, for momentum traders. You really want to kind of understand where the signs are more positive for you in finding those setups. Certainly gold doing really well. We can see some of these nice utilities starting to maybe kind of wane a little bit. It's a difficult one, right? Because utilities has that tie into energy. And the AI trade, of course, which makes it a little bit more noisy these days. But healthcare, I like to see. Financials certainly are ones to watch. We're starting to see those banks act a little bit better. So I'm a believer in the breadth. We've, of course, have some crypto things in here. You can kind of see blockchain, how that beta tilt is working, what is going on in that space. What is, it sort of looks at a version of a scanner, sort of looking at things where are we lopsided, right? You want to know when everybody's on one side of the boat, then you can pretty much know which way that boat's going to tip over, right? You want to bet against the crowd sometimes, and sometimes you want to bet with the crowd, right? So income, pivoting, income turbo. When we get strategically greedy, we're going to push that needle in the right direction in order to absolutely maximize. And I'll show you some performance here. We had incredible results. So again, in the morning, we come here, we look here, what's everything doing? We check out a couple of names. We've got our American Express, which has been fantastic. We have a position. We had a position in that in one of our portfolios. Made a whole bunch of money in a couple of weeks. We sold out of some FCX, some copper. Moving to where things make sense. If you get stuck in the same old, you're potentially missing out on a lot of opportunity. So some great things. I think the next year is going to be incredible, and with the right tools, you are going to be in better shape. So this thing is going to basically triple in price at some point. I have so many people, and it takes a lot of effort. It takes a lot of development. It's a lot of cost, and it's a lot of my time, right? Every week we have a live class where we go through, we build my portfolio and your portfolio. We build together. We look at it. We look at potential hedging opportunities. We manage. We discuss. There's a 24/7 community where we can discuss things as well. Wonderful set of people in there who are really starting to enjoy the back and forth and being able to discuss things that way. Learning, right? That trading can be a very lonely game. Having a good community of quality people is a really, really big difference that you'll see over time. So wonderful stuff. I hope you enjoyed that. I hope you got a little bit of an idea of how this thing works. And I'm really, really excited to bring it to you guys. There really is nothing like it on Earth. I really have never seen anything like this. So I hope you've enjoyed that, and we shall see you next time. And if you want to join the program, the sale is going to end in the next day or two, as soon as I hit a certain number of people, and then that's it. And then that's it. So I did the math. It's $8 a day for somebody like me, and a tool like this guiding you. It's incredible. I spent $3,000 on a long weekend in Montreal for my family, and the hotel wasn't even that great, but we needed a couple of hotel rooms, and there was eating and this and that, and the $3,000. My mom had a few shingles replaced on her roof, $6,500. $3,000 a year, and you get locked in at that price. When this thing is $9,000, $10,000, $12,000, because I'm going to keep adding features to it, you're locked in at $3,000. You are in my head for life at that point, at $3,000 a year, and it never goes up. So we will see you regardless. Good luck to you. Enjoy the season. Enjoy your family and friends, and I wish you all the best. Best of health, best of wealth, and best for 2026. I think it's going to be just a banger of a year, and let's enjoy it together.